Hello, ladies and gentlemen. I am your host, Permable Nino. Some of you may know me as Jordan, and I want to welcome you guys to the first edition of Leveletics Research Videos. Today, we're going to just talk about the article that we published, and then also wrapping things up, we'll look through Dude Terminal a little bit to just talk about the state of the market. And then after that, we'll just look at a few charts in TradingView, and then head out for the weekend. For those that are tuning in, I really appreciate you being a paid subscriber. And another thing is, I also appreciate you being patient with me. This is the first time I've ever done a recording for any video of any kind for the most part. I've done a few podcasts here and there. But, the goal for this is just to keep things light, grip it and rip it, and make one of these things, these recordings, a thing that people enjoy to tune into. I don't want this to feel like labor for anybody. So we're just going to talk the crypto markets, talk some coin, and just have a good time. So let's get into it. Okay, so just to start things off, the beginning of the article, we kind of kick things off with how do we look at crypto markets, right? And this chart shows the median rolling 30-day volatility of all altcoins on Bybit. And for a little bit of context, this captures rolling 30-day volatility across 500 plus pairs. So there is a very large amount of data going into this chart. So the blue line shows the median rolling 30-day volatility for these altcoins. And the biggest thing that we kicked it off with is that during bear markets, volatility dies for alts, right? Because people exit the casino and they want nothing to do with crypto anymore. So look all the way back to July 2021. There's just a downtrending line all the way through to almost mid 2023. You can see that, right? It's just down and to the right. And this is when people are exiting the casino. People reshuffle back to cash and to BTC. And the data shows in the charts the altcoin returns are not very good during this period either. And the entire point of this article was to kind of try to give people a framework for understanding the contractions and expansions of crypto, right? So we're kicking things off here in a big way with the macro bull and bear markets, right? So as you can see, the volatility dies off all the way through the end of 2023. And at the end of 2023, guess what happened? The Bitcoin ETF got greenlit and launched, right? And then since this period, there was a huge boom in crypto, especially altcoins. This was the go-to period to be owning alts in this bull cycle. And you can see it from late October 2023 all the way through to March, April 2024. This was the gigantic run up in altcoins, right? So this period, altcoin volatility expanded a lot because they were pumping, right? When altcoin volatility dies off, it's just when they bleed out, right? Just slow bleed outs from disinterest. We had the sideways period where volatility just kind of died off a little bit for the rest of 2024. And, frankly, altcoins got kind of clobbered in this period, to tell you the truth. If you go look at the charts, a lot of them just basically just got murdered back then. And then we get one last final pump after the U.S. presidential election at the end of 2024. But ever since then, it's just been bleeding down to the right volatility, right? The volatility has just exited the casino at this point. Nobody's trading altcoins. And the fun is over, basically. The music stopped, and you have, only in retrospect, you can see some of this stuff when it comes to the median rolling 30-day volatility, right? And the good news is that for the rest of the article, we're going to have some more metrics that kind of show you, instead of looking at things in the rear view, you can kind of figure out what's going on presently, right? Because obviously hindsight is 2020. Nobody really cares if, looking back on this, it was obvious. It's no, you want to know now, and you want to get things done the right way in the moment, right? So, so you can see that this has been bleeding out, and even when Bitcoin made new highs, right? Altcoins were still just dying. The only bout of volatility that we had was when the gigantic deleveraging event took place on October 10th, right? And, it looks like that, if you look at the price chart here, because this is using only closing candles, you don't even notice it. You'd be if you didn't know any better, you would ask what happened up here, what is going on? But if you were in crypto, it was a day where everything died basically. And some altcoins dumped 30+% in a couple hours. So, let's dive into the rest of the charts now. Okay, so this chart shows the percentage of assets on Bybit that are making new 90-day highs, right? So this shows you what percentage of the 500 plus assets are making new highs over the past 90 days. And as you can see, the number one thing that you notice about this chart is that there aren't many periods where this occurs, right? Keep in mind, 2022, this chart starts at April 2021, which is effectively pretty close to the beginning of what you would call the crypto bear market of the last cycle. You got one little pump in like fall of 2021, but after that, it was just down only, right? Just dead. There's not much going on here. There's small little pumps along the way, but there's nothing to get really too excited about. And then the next time the market actually woke back up was at the end of 2022, beginning of 2023, when Bitcoin finally broke out from its bottom. And, you don't really get too many more of these pumps throughout the cycle, right? And this is how you define whether or not something is like a pumping market, right? Is this a bullish trend, right? Are assets making new highs? That's like the simplest way to describe it, and especially in crypto, right? There are market conditions where Bitcoin is outperforming altcoins, right? That does happen even in bull markets, but altcoins are still going up a little bit, even if they are underperforming Bitcoin. So that's one thing to keep in mind, and that's like a big thing of how we're gauging whether or not this is like actually like a legitimate, real bull market, right? So you got this in early 2023, and then the big one is like we talked about. You see, look at this extended period of elevated values of altcoins making new highs, right? There's like a little dip at the beginning of 2024, right after the ETFs went live, right? But after that, it just stayed high. It never really flatlined like you see in these other periods, right? So it dumped down to like 10% and then just went back up to 80. Another thing you can see is that the market cools off once it reaches 80, right? When basically every asset under the sun in crypto is up is printed new highs over the past 90 days. It's like, okay, pal, this is getting frothy. The time to exit the casino. But until then, no, you get to enjoy the ride, and you want to see some sort of volatility in it, right? When you get these periods where like not much is really happening, you get a little bit excited on like the smallest pumps, but there's really just not much going on there. And then the last thing I want to point out about this chart, right, is if you look over here in 2025, basically the entire year, Bitcoin printed new highs in May of 2025, right? In other periods, when Bitcoin makes new highs, you see Bitcoin making new highs at October 2023, Bitcoin making new highs in November 2024, Bitcoin making new highs at January 2023. You see that these values, there's some follow through on the pump, right? There's something going on. Altcoins are actually ripping. However, when you look at 2025, when we made these new highs in the summer of 2025, there's not much going on here. Like altcoins, like some of them participated a little bit, made new 90-day highs, but the reality is not much happened. And that might have been a decent sign to be like, oh, maybe it's time to exit the casino. Even Bitcoin right before the October 10th dump, right, makes new highs like on October 6th. You look down here, there's just really not much participation, right? There's not much going on here. So these are some of these signals that you can look at now and presently where you're like, okay, maybe like there's some alarms going off in my head that this is like something is a bit off. And especially after the October 10th candle, it's like, okay, time to get out of the casino. And frankly, at Levalytics, we didn't even crush that perfectly ourselves. We were kind of getting our feet under us. It was we went live October 1st. We took a beating that day. We were overexposed for sure in the middle of October. So, just because I talk about it, show the analytics and stuff like that, doesn't mean I always get it right myself. So that's just one thing to keep in mind. And, we live and we learn. So, but yeah, as you can see right now, there's just no signs of life, flatlined, right? This is bear. This is mega bear. And on that note, we'll move over to the percentage of pairs that have made new lows over the past 90 days, right? When a lot of coins make new lows, that's a signal that obviously things are in bad shape, right? And you can see there's like a lot of prints like this. Like usually when you get these prints 70% or higher, it means the market is extremely oversold because everything is down and has printed new lows over the past 90 days. And you see it over and over again. And even another thing that's worth noting is that during a bear, like say, like if you're in a secular bear trend, let's say like the end of 2021 all the way through 2022, right? This was a gross period where like no new highs were really made for altcoins, right? You didn't really get that. You saw in the previous chart, right? There's not much going on there. However, right, in the bull market, you can get these periods where altcoins just die off, right? Like Bitcoin bottomed December 2022 and made its move out of the bottom in January 2023, right? But if you look at midsummer here, right, June 2023, a lot of coins dumped and printed new lows, but that put in a bottom there, right? You got another one after this. I think this was like a period where Michael Saylor was like really getting into Bitcoin. And then you get these periods again along the way, right? You got it in the middle of 2024. It got a huge bottom print. And I think one thing that, people don't realize or pay attention to is that once you enter a period of sideways like this, you want to know, like, when's the market going to get properly rinsed, right? This is something you can keep in mind when you're using this metric. You're like, oh, the price has been basically sideways for, I don't know, March 2024 all the way to June. That's months of sideways. Like, and if you think like, oh, this is going to be a sideways range that holds, at a minimum, you need something to get cleaned out, right? Somebody needs to pay, and it's usually the altcoin holders, right? Bitcoin holders don't usually pay for their sins as much as altcoiners do. So yeah, you get these large print in July, 4th of July weekend, basically 2024. And yeah, every time you get these large oversold prints, you'll get some sort of bottoming pattern along the way. The only time you really didn't get it was after the October 10th dump. You can see our October 11th is when we got this huge print up here of a lot of large percentage of coins printing new 90-day lows, right? But this held up until December 18th, which December 18th is over here. I mean, this is 2.5 months straight of down while this value's been elevated. So coins were just bleeding out after the October 10th dump. People constantly say, oh, something broke in the market. Nobody really figured out what happened with what was going on. But the reality is that, like, it was pretty, in retrospect, obviously, some people were like, the music turned off. It's over. Musical chairs. If you don't have your chair, good luck. We're dumping this thing. And that's exactly what happened. And now, if you want to look at the present day, on beginning of February, we had another big dump where it was oversold. You can see February 5th, 80% print. That's where we put in the bottom before having this sideways range that we've had going on here. And right now, I think what we got, the current value is 42% of coins have printed new lows over the past 90 days. This is like a pretty in-between value, to tell you the truth. There's not much to glean from here. But yeah, that's not obviously, in bull trends, you can see this just goes down to zero, right? Bull trend, down zero on a pump, down zero on a pump, down zero on a pump. So you have to keep in mind, this is far from a bull trend. This is extremely bearish neutral type read here. And yeah, let's move on to the next chart, because the only, these bearish bull bear trends aren't the only things that matter. One thing that people overlook a lot in crypto is sideways markets. And sideways markets are where where the market recharges and gathers its footing before the next move. The real question, though, that a lot of people have is like, what is considered enough sideways before the market pumps? And that's kind of one thing that we focus on in this article, is try to give you quantitative frameworks for understanding, oh, this market has gone sideways for enough time. And the way we measure if enough sideways, quote unquote, has happened is if a large percentage of coins have not broken new highs or new lows over the past 90 days. And that's exactly what we're showing here, right? And the large values are 80% and above. It's the same thing across all three of these metrics, right? And you get it in multiple periods here. This is right before the Bitcoin ETFs got approved, right? You have like 80% prints. You need these charge up periods. And a lot of the time, these catalysts that occur end the sideways, if that makes sense. But the market needs to be charged up and have the juice in the tank to be able to make this big bullish move, if that makes sense. It always lines up in a weird way where these headlines, like sometimes you ask yourself, oh, why didn't this headline move the price more? It's like, well, maybe the market was already oversold, right? Maybe the market didn't have the charge or the juice to make a big move from there. So let's look at a couple periods here, though. Like, this is after the Bitcoin ETF got approved, right? A lot of gas in the tank for a pump, right? And then you see it getting released, right, on the pump. The price moves higher, altcoins follow. You get like a emptying of the tank as somebody steps on the gas in the market for altcoins, right? So this is a period where it's like, okay, you're like already kind of late. Like, a lot of things have already moved. You need to be aware of your risk management when these type of things happen. You're kind of late to buying at this point. So keep in mind, the market did move up for a while. I remember this period pretty well myself, and that there was like one little leverage clean out during this period that you had to be really careful of. Otherwise, it was pretty much like a decent run of altcoins during this phase. And then look, however, right, January 2024, this is after like a grind up for BTC and altcoins were ripping. But look at the next big leg happens with a recharge. A lot of coins are recharged here. A lot of coins haven't made new highs in 90 days, but they haven't made new lows either, though. Just a lot of sideways. Everything's charged and juiced. Boom. You get another rip, and you see it empties the tank. And you get this over and over again. Here's another easy example, right? The election. The market went sideways for a very long time. There's a big old catalyst right here, right? The market, it hasn't been emptied, because keep in mind, in July 2024, the market got emptied, right? The sidewaysness got emptied on this dump. But just enough time. There's like 3-month period between July and to the election, 3 to 4 months, where you finally get some recharge. and the market recharged in a big way, right? This is a lot of juice in the tank. And then boom, Trump wins the election. Everybody thinks he's going to be the new crypto god that sends us to new all-time highs, which he did temporarily. And we empty the tank. So you get this over and over again, right? And you even got it like during this downtrend, like prices down since October 10th. You get to January 2026, right? You can see that we've been sideways for a couple months now. Big charge, January 17th. January 17th is like right around here, right? Right before we dump. The market has enough juice to dump it, right? And we got exactly that. So now let's talk about like where we are now, right? If you look at the daily candles, we got a semi-large print on March 17th, which is near the highs. Sorry. There's like a little decent setup for it's not like it's not the typical high print. You can see it's not near, the amount of coins that were going sideways did not nearly get to the levels that you got on these other prints, right? It's a bit lower, but there is still potential. I think the move would probably be if we got like some down leg from here. I don't think it'd be as violent as what we've seen in the other ones, but the current read right now is 54% of coins have gone sideways over the past 90 days. So that's just something to pay attention to. And the thing is, that we continue to talk about is that you don't have to obsess over daily candles or monthly swings in price, right, to trade crypto. So what we're going to do is look at the next chart, which shows the percentage of coins that are sideways over the past 28 days. And it shows you a way that you can trade lower time frame charge ups in the market, right? So like, let's start here. October 2025, right before the big dump, right? Price is going sideways, a lot of charge in the tank, boom, released on October 10th, right? And then you get it along the way. After this, the market was oversold, remember? Let's go back here. It was empty, right? It got emptied on October 10th, right? And it's down up until the end of December, right? So on the daily candles. Let's go back to the 4-hour candles, which is showing the past 28 days of sideways. Along the way, you had a lot of periods where this got charged up, right? End of October after this is like right here. A lot of charge up. Another release downwards, right? Boom, emptied. And then you wait, the price bounces a little bit on November 10th or 11th. Little charge up, boom, next leg down all the way down to $80,000, right? So you get these charge up periods even on lower time frames. So you can go in and out of the market. You can gauge how coiled things are on any given time frame that you want to. And the nice thing about crypto is that it all moves together. This is why it's like super valuable, because all you do is all this stuff moves in the same direction but at a different speed, right? So you basically are waiting for the slowest and fastest movers to catch up to each other, and that's how you get these very large prints. If you plot this type of data for equities in the stock market, it's not the same thing. It's very, very noisy because it's just a different market, right? Not everything moves in the same direction, and they kind of, march their own beat a little bit. So that's something to keep in mind. Crypto is just specifically structured as a market and geared for this type of analysis. So yeah, here's like a couple of the most recent, sideways periods, right? These have actually been pretty lengthy, right? End of December all the way to end of January. It's like a month before this thing, uncorks and gets rid of things, right? The emptying of the tank doesn't happen for another month. We're kind of going through a similar period right now too, down in February through March of 2026. We've kind of had a month and a half of like the market just bopping around a little bit. So, for a lower time frame type move, whatever unleashes this thing and empties the tank could have some juice to it. That's something to think about and pay attention to. And like I said, however, you compare it to the previous read on the daily chart, this is kind of like, not that exciting right now. So I think if you want like a market bottoming type move, I think we might need just a little bit more time. And I think what actually this whole situation in Iran gives us is that it gives us an opportunity for this market to just shuffle around, and soak up some sellers and build some sideways and get people off sides and in cash or short in the market. And I think, maybe another month of sideways could do this for us. It would do us a great deal of good. If we're going to bottom here, of course, the market could just shift downwards if there's any big news development that would scare people. All right, well, let's move on to the next chart now. Okay. I'm realizing that this is very difficult to see in this angle, but you basically, you see better in the article, but long story short, I'm going to keep this quick just because it's not easy for people to see. The duration of these sideways periods usually lasts 40 to 70 days. You'll see it where it's highlighted in the article. And what really happened is that you had a gigantic 180 days straight of sideways, basically 171 or something like that, 172, 173 days of sideways in 2025 before the market rugged. And a lot of people talk about this when it comes to any sort of market that you're trading in. This even happened with gold where it hadn't broken any new highs or went sideways for a long time before this monster run it went on. And the basic saying is that the longer a market goes sideways, the more violent the move that occurs afterwards. And this is exactly what occurred in crypto, right? The market had gone sideways for 6 months, basically, up until the October 10th deleveraging event. And then since then, it's just been a down-only violent move. And when you have a lot of gas in the tank and you charge things up a lot, things can get pretty ugly and maybe even pretty quickly, right? It's just like somebody who's at rest. If you like to exercise, imagine you play 2 soccer games in a day versus somebody who gets to play 2 games over 2 days. You just get that extra rest period and you're probably more explosive, when you're doing your sprints in the middle of the game, right? When that's going on. So that's just something to keep in mind. And that's why in retrospect, now that we've got this metric built, not surprising that the market has traded the way it has ever since that deleveraging event. It was a huge charge up, huge buildup, and we released a lot of stored energy in the market over the past, it's happened in October, so past 5 to 6 months. So we'll move on from there. And then here's the last thing, the net breadth. So what this metric calculates, hold on, let me shift it a little bit. What this metric calculates, here's 0, right? It calculates the percentage of pairs that have made new highs over the past 90 days minus the percentage of pairs that have made new lows over the past 90 days, right? So negative values will show you the trend, and a positive value will show you the bull trend. And you can see it here, right? So here's like the bull trend for beginning of 2023, positive continued values, right? Then after that, we had a period of sideways, right, for a long time, starting in May of 2023, right here. So all negative values, basically, like a small glimpse above 0 right here for net breadth. But reality is like you had basically from April/May 2023 all the way to October with negative values. This is a large charge up bearish period. Altcoins did not trade particularly well, even though Bitcoin went sideways. And then, after that though, right, you get like this positive net breadth print for October all the way to April 2024. You get 6 months. This was like in retrospect, this was like 6 months of nonstop up only. There was like the deleveraging event that took place in end of December, beginning of January 2023, 2024. But otherwise, it was basically up only. This was the trend, right? So you get above 0 print on net breadth. You're in business. That this is like an easy thing in the present that you can track to be like, what is the health of this market? How risky are people feeling, right? Because that's the thing that, you need to remember about altcoins. They're risk assets. So, their performance is directly a gauge on the market's willingness to take risk in it. And because otherwise you don't really get much of it in crypto, right? You got a little pump, leading into the election, you got some positive prints. Like even in September, October, you were starting to get some signs of life up here. Like, okay, like, oh, we're getting dangerous, right? Going into the election. So there are always signs, not always, but there are usually signs before these large catalysts that pump the living shit out of markets where it's like, oh, there's something going on here. There is life under the hood. Because, even like after this pump in 2025, like, when we bottomed after Liberation Day or whatever Donald Trump called it, you didn't really get much life. Like, you got barely above 0, but, by the time we even got to the end of September, values were negative. Even on this pump all the way for Bitcoin on October 6th, 2025 to 125,000, you were getting negative prints here. I mean, this is like a bearish divergence of some sort, right? So there were signs that people were weirdly not bullish for crypto. And ever since then, it's been negative, right? We topped on January 16, 2026 at 0, basically, which was like right up here, top ticked it. And it's a bear trend. If, like I said, below 0 and above 0 tells you if it's bear or bull trend. And, we're still, what the current value today is what? Minus 40%. So, there's a heavy bias towards selling and altcoins making new 90-day lows. Okay, so that's like the article summed up right there for you. And the whole point of this, right, is to find different ways for people to evaluate from a quantitative perspective, what is enough sideways? How bearish is the market? How risk tolerant are people within the market purely by just gauging price action? And, like I said, this might seem like a lot of charts. And if you have any questions, feel free to shoot them my way via Twitter or direct message on Substack. But the reality is, like, we're trying to simplify things for people. And, a lot of these issues and the reason why I build this stuff is because I've made the mistakes in the market myself. I've made a lot of mistakes. And that's basically the entire point behind Leveletics, is to help people upgrade the way they look at markets and be organized and have a strong instinctual understanding of what the hell is going on, right? Because there's a lot of noise in crypto, but there's a lot of alpha that you can get from crypto as well, right? You can outperform if you know how to trade crypto. You can make life-changing money, right? That's why a lot of people come to crypto. They come for the riches. They come for the sick pump and the sick gains. But yeah, so if you guys have any questions, feel free to let me know. And with that, that's the end of the article. Let's jump into Dude Terminal really quick, though, just to look at some metrics and get a gauge for what we released the article on Tuesday talking about how we're feeling a little more defensive in crypto. And we talked about certain metrics, like, for example, the Coinbase premium, which is something I want to follow back up with you guys with before the weekend. So you can kind of get my thoughts on, like, where things stand with that and what the newest prints in the metric are showing. So this is the median Coinbase premium for altcoins, right? And it is still printing negative, but it's just negative, right? The reality is, like, you don't want something. Geez, I don't know what just happened there. That's annoying. Hold on one second. Yeah, you can see, like, right in October 2025 all the way through November, you had deep negative discounts on Coinbase assets versus Binance. And that's a problem, right? It's just like, obviously if people think that Bitcoin's going to go down, why would you hold altcoins? And, Americans are big drivers of flows into crypto markets. And, you got the same thing. This is what concerns me about the current period of getting these starting to move back into negative territory. I don't want to see a persistent discount for Coinbase alts, right? What the reason for this is because back when we were above 80K, after like a little bit of a period where it recovered, right? You can see a Coinbase premium here for a Coinbase. This is very deep discount, right? These are very low values. This means that the price on Coinbase is minus 0.3% less than it is on Binance. That's like huge. That's a wide gap. You could drive a truck through that. So, you just don't want to get back down to these levels. I think I'd be really concerned about that. So I think, maybe there's a small period where, like, people are getting a little risk off here, and which is what we did. We're, like, kind of listening to the market a little bit, especially because we don't have what we consider perfect conditions to get max long. We're trend traders. We're not trying to snipe the bottom, and we know we're not going to. So yeah, like right now, this thing gives some cause for concern, but don't really, it's nothing to, like, freak out about quite yet. But yeah, I figured I'd give you guys an update on that. And then here's the Leveletics portfolio. We've made a few changes since we released the article on Tuesday. Let's do this. Okay. You always press, if you don't have access to Dude Terminal and you're a paying subscriber, by the way, just feel free to shoot me a message via Twitter or Substack direct messaging, as I've said before. So let's hide this. Okay, so this top line up here, the blue one, shows the percentage of the portfolio for Leveletics that's in cash. We went from 63% cash all the way up to 80% cash when we published on Tuesday. Now we're kind of back down to like 75% cash. And the reason for this is that we added a little bit of FET back to the portfolio, and we added a little bit of Zcash. FET's actually a trending asset that, via our normal trading system that we're excited to own right now because, we talked about it in a previous article that AI is one of the few sectors that has, like, on bullish impulses, provides you with a better risk-adjusted return than Bitcoin. So if you adjust for volatility, it's still going up enough to merit wanting to own it. Despite the volatility, right? So, we're just focusing on adding to these core positions. And another thing with Zcash is that the thing is just woken up. And I think a lot, I'm kind of like fundamentally been a huge Zcash hater for a long time. I've been in crypto for since 2016. I've been a tad bit of a hater, but you just can't ignore that the thing is just trading with life. And like we talked about earlier, altcoins trading with volatility is a very good sign. And if you look at the Zcash volatility, I don't have the chart right now, so I can share it another time. But Zcash volatility is just on the uptick over the past past 6 years. It's just been trending up, and this is just the most gigantic bullish impulse move that we've had for Zcash. So yeah, we added Zcash and we added FET. Those are the two assets we're probably most bullish on right now. As you can see, we're the blue line at the top. This is the returns of the Levalytics portfolio versus BTC and altcoins since we launched October 1st, 2025. We basically top tick the bull market. You're welcome, everybody. Yeah, unfortunately we're down 32% right now. BTC's down 44 and altcoins are down 61. Nothing to write home about. But we're in the game. So basically, also we have like our portfolio drawdown map here. It's like, okay, what if you're trying to figure out what amount, if you're only 25, forget it. I'm actually going to move on past this. This is too complicated for me to explain right now. And then here's another thing I want to follow up with people on: U.S. stock returns. Wait for this to turn on. Sorry. There's so many charts in here that sometimes it takes a second to load. I probably need to fix this. The Dude Terminal website is, work in progress. So we're getting there each and every day. Let's keep scrolling down. Okay, here's the median 90-day return of stocks. This is like, come on, this tracks what? This tracks like probably 40 something stocks. The stocks that are in this basket are up here. These are all the stocks. It's like 40 to 50 like large cap stocks across various sectors. So hold on one second. Median 90-day return of all stocks versus the SPY. SPY is the black line. And the red dots here show you periods where the VXXC score gets above 2. And we're getting one of those prints right now. So, usually these don't really happen. This happens like during huge market meltdowns. I don't know how many times this has happened. This data goes all the way back to 2014, so it's been 12 years. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So this is like the 10th time in 12 years that this has happened, where you get a large VXX Z-score print. And the VXX is just a tradable instrument related to VIX, which just measures expected volatility in traditional equities markets. So you're getting really large prints right now. And I talked about this in the previous article, but if you want to talk about something that could potentially bottom crypto, is the market being, because the market has looked like pretty resilient at these levels after getting sold off in such a disgusting way over the past 6 months. Whatever is going on with Iran and oil and the equities markets, something chills out and people take their foot, the bears take their foot off the gas from pegging the price down in crypto. The release of this and the VXX Z-score going down could be the moment where you're like, oh, the valve is getting released and crypto bottoms and pumps really hard. So that's just like something to keep in mind as, we're kind of trading during this period. And like I said, because this is like these red prints, these red dots, not common. These do not happen very often. And the median 90-day return for that large basket of equities is like -7, -4, somewhere. Like it's negative, right? You don't really get many of these periods where it just goes negative. Stocks have like a very bullish skew to them. They just tend to trade to the upside more often than crypto does. Crypto has a lot of down periods and then violent up periods. Stocks have like not common down periods, but they grind up over time. So, it's not that common where you get negative 90-day rolling returns for a lot of equities. So, yeah, we'll have to just be tracking this in the coming weeks and see what comes of it. And then, okay, so let's move over to TradingView now. This is a chart I'm tracking a lot. ETH BTC price. And the momentum indicator that we have on the Dude Terminal website, I also built it into TradingView as well, just so I can have it in multiple places. And this bottom plot shows the backtest of buying blue, selling red. And you can see for ETH, it's a 1,400% return versus buy and hold, which is 6%. So this metric does a very good job of trading ETH BTC. And as of today, a bullish print would occur with a close above 0.035. So above that line, I am maximum bull. That's where you want to own ETH, and I don't even think you think twice about it. And for that reason, I actually just don't think there's much reason to rush or just get maximum long, if you're a momentum trader. Because there's no momentum on this chart. The momentum's to the downside. That's why there's red candles here. So, for that reason, there's reasons to be excited. ETH hasn't looked as shitty as I think a lot of people would think it would during a bear market, quote unquote, because it's been a very weird bear market. Asset prices are down a lot, but there's a lot of positive developments and headlines in crypto. Something under the hood feels a lot more healthy about this bear market, whereas like in the past, it's kind of been, I don't know if you've been around for the other ones, but there was like an existential threat. You're like, oh my God, like things are fucked. Like, it's all going to zero, just pack everything in. So ETH BTC is a chart that you really want to be tracking because, it basically, when Solana was pumping in this past bull market at the beginning, people are like, oh, Solana's the new ETH. It's like, no, it's not. And the reason why it's not is because the market altcoins don't pump as hard when Sol pumps. When ETH pumps, altcoins absolutely fucking send. And that's something you want to keep track of, right? Like ETH, you want bullish ETH price action if you like altcoins. So the ETH BTC candle printing blue on this chart, and you can see, or you can just track ETH USD on Dude Terminal because I built it into Dude Terminal as well. That occurring will be a major bull signal if we get it. In the meantime, you just need to sit tight, right? It's just about surviving, not like blowing your wad and losing all your money while the market goes down and sideways. And then here is the FET chart that I'm going to show you. Blue, right? Like FET BTC, blue. So you can see net return 500%, buy and hold 96. I think this is because like the launch was a bit weird. That's something to keep in mind of. But here's the FET USD chart though. It might give a red print today, which is not great. But otherwise, you're seeing blueprints here. There's signs of life. And the net return of this is 1,800% since inception. This is using the FET USDT pair on Binance. So there are assets that are showing strength out there, and you need to keep in mind which ones are moving stronger. And, the problem is like, I want to just like ape into these things, right? Like, in a perfect world, ETH BTC would have a blue candle, BTC USD would have a blue candle, and then you just start firing on everything. Like you get ETH BTC blue and then BTC USD blue. That's when you really like, okay, the second you get that, the same day that you have both of those, that's when I really want to start firing and buying the shit out of stuff with the Levelitics book. But in the meantime, you have to be patient and make sure you actually have cash for that moment. And yeah, that's the plan. And I think I'm just going to leave it at that for today. I was like honestly pretty nervous before going into this, but I feel like we kind of flew through it. So I'm excited about that. And I really hope that you guys enjoyed this video. I'll catch you guys next time. Appreciate it. And I hope you guys have an awesome weekend. Talk soon.